All right, let's jump right in. We're going to pull back the curtain on the world of financial trading, especially if you are starting from absolute zero. Think of this as day one, and trust me, we're going to make it count. So, have you ever looked at all this stuff, the crazy charts, the weird words like pips, leverage, spreads, and just felt like it's a secret language you're not in on? Well, it's totally normal to feel that way. It can look really complex from the outside. But here's the deal. Give me the next 5 minutes, and I promise we're going to translate all of it. You'll see that these big, scary ideas are actually concepts you already get from your everyday life. We're just going to connect the dots.
Okay, so let's start at the very beginning. The big idea. What's the point of all this? What are we actually trying to achieve when we talk about trading?
When you boil it all down, it's actually super simple. This isn't about collecting a paycheck. It's all about trying to make a profit from the way prices move up and down. And the golden rule, the one thing you'll hear over and over again, it's right there. Buy low, sell high. That is the entire game.
And here's a perfect way to think about it. Let's say your mom buys a big bag of rice for 10 bucks. She has a hunch the price is going to go up. A week later, sure enough, it's selling for $12. She sells it. That $2 difference, boom, that's her profit. That right there is the essence of trading.
All right, so we've got the main idea down. Now let's start decoding that secret language I mentioned. We're going to learn a few of the key terms you absolutely need to know to follow along.
So what can you actually trade? Well, all kinds of stuff. You've got Forex, which is basically trading one currency against another. And then you have something called a CFD. Now this is important. It lets you trade on the price of gold or Bitcoin, but here's the kicker. You don't actually own the physical gold or the Bitcoin. You're just placing a bet on whether the price will go up or down. That's a huge deal for beginners.
Okay, but how do we measure these tiny price changes? We use a unit called a pip. Honestly, just think of it like a millimeter on a ruler. 1 millimeter is tiny, right? Pretty insignificant. But a bunch of them add up to a centimeter and then a meter. Pips are the same way. One is small, but the goal is to stack up a lot of them.
Now, this next one is super important. Every single trade you make has a tiny built-in cost. It's called the spread. All it is the small gap between the buying price and the selling price. And what this means is, the second you enter a trade, you're already down by a very small amount. That's totally normal. But it tells you that your trade has to be good enough to climb out of that small hole just to break even.
Here's a simple way to picture it. Your local corner store buys eggs for $1. They sell them to you for, say, $1.10. That 10-cent difference, that's their spread. That's how they make their money. It's the exact same logic in the trading world. All right, making sense so far? Good. Let's move on to the really interesting stuff, the tools you'll be using. We're talking about power, the risk that comes with it, and most importantly, how to get started safely.
You're going to hear the word leverage thrown around constantly. What is it? Think of it like a financial superpower. It's basically a small loan from your broker that lets you control a much, much bigger chunk of the market than you could with just your own money. And check this out. With something called 1-to-100 leverage, your little $100 can suddenly control a $10,000 position. I know, right? It means your potential profits can get huge, fast. But, and you have to burn this into your brain, it magnifies your losses by the exact same amount. It is a very, very sharp double-edged sword.
So here's the best analogy I've ever heard for it. Leverage is like the throttle on a powerful motorcycle. If you go slow and steady, you're safe. You're in control. But if you crank it to full speed right away, you're going to crash. For anyone just starting out, this isn't a suggestion. It's a rule. You always use low leverage. Period.
So, what's the practical way to stay safe? It starts with the type of account you open. Don't even look at the standard or ECN accounts. Seriously, just ignore them for now. Those are for the pros. What you want is a micro or a cent account. Why? Because they're your training wheels. They let you trade with tiny, tiny amounts of real money, so you can learn without getting wiped out. Okay, so you've got the lingo down, you know the safety rules. Now for the million-dollar question, right? How in the world do you decide when to click buy or sell? Well, that comes down to learning how to read the market's mood. And you know, one of the coolest things about this whole world is that you can make money no matter which way the market is going. If you think the price is headed up, you go long, which is just fancy talk for buying. But if you think the price is about to tank, you can go short or sell and profit from the fall. Pretty neat, huh? So, how do you read that mood? A lot of traders use these things called Japanese candlesticks. They might look a bit weird at first, but they're basically pictures of market emotion. For example, a pin bar is like a parent putting their foot down and saying, Nope, the price is not going any higher. An engulfing candle? That's like a big brother completely taking over, showing that one side is totally in control. It's all about visually seeing the fight between buyers and sellers.
And one last thing on timing. It really, really matters. You don't want to trade when the market is slow and sleepy. You want to be there when the action is happening. And the best time for that? It's usually when the big London and New York markets are open at the same time. That overlap is when things get lively, and that often means more opportunities. So look, we've gone over all the mechanics, the nuts and bolts. But the truth is, none of that matters as much as this next part. What really separates the winners from the losers in this game is all about mindset. Your number one job isn't to get rich, it's to survive. And survival means using tiny risk, being incredibly patient, keeping your strategy dead simple, and remembering this is a marathon, not a sprint.
And if you remember only one thing from this whole explainer, let it be this. Trading is not an ATM. It is not a get-rich-quick scheme. It is a skill. It's just like learning to play the guitar or speak Spanish. It takes time, it takes discipline, and you're going to make mistakes. The key is to learn from them and keep growing.
So there you have it. The secret language isn't so secret anymore, is it? You get the big ideas, you know the key terms, and you understand the mindset you need to survive. So the question for you isn't what is trading anymore. The real question is, what's the very first skill you're going to start to practice?